Hey guys, this video we're going to look at environmental policy, specifically concentrating on the emissions trading scheme and how that can impact the goal of strong, sustainable economic growth. So to remind ourselves what the emissions trading scheme was, it is a cap and trade system whereby you have a market for carbon permits. So what this means is that when businesses want to pollute or when businesses want to emit carbon into the atmosphere, they would have to buy a certain number of permits in order to be allowed to, by law, to pollute or emit carbon. And these permits cost around $25 per ton of carbon. So that's the basic outline of the emissions trading scheme. If you guys want to look at this in greater depth, I'd encourage you to look into the video on the emissions trading scheme, also part of this playlist of lectures. Secondly, we have economic growth, and this is achieved when GDP growth, or real GDP growth, is maximized without compromising inflation. So as we know, inflation is the major economic goal, and for a strong economic growth to be achieved, then inflation should be kept low, but this would be kept low at the maximum possible rate of economic growth. The second part of the strong sustainable economic growth is this idea of sustainable economic growth. And this relates to the idea of intertemporal efficiency. I'm just going to note here, intertemporal efficiency. So that we're not consuming all our non-renewable resources at this current point in time, but we're leaving it for future generations as well, and we're helping the economic prosperity of future generations, and also the ecological sustainability of our world. So what we're going to do in this video is we're going to split up this into two pieces of analysis. First, we're going to look at the short run, or the short-term impacts of any environmental policy, but we're going to look at the emissions trading scheme as a general example and how that impacts economic growth. And then we're going to look at the long-term impacts of this emissions trading scheme on economic growth. So firstly, in the short term, we will see that carbon-intensive firms, or those firms who are dependent on carbon, carbon emissions, so e.g. you're going to call, say, coal, oil, and possibly aluminium mining. It's a bit messy, excuse that guys. Possible all different types of mining. They require large emissions of carbon. And since we've placed a cost on carbon, say $25 per ton, this would actually increase business costs. And because we know that firms exist to maximize their profits, this increase in business costs actually cuts into profit margins. And so when these profit margins are eroded, this means that to preserve their profit, these firms will increase their costs, or the price of their good or service, and pass it on to consumers. And this would in fact impact our goal of low inflation. So as we know, the goal of low inflation is when CPI is kept between 2 to 3%. And most of these businesses which produce electricity, produce oil, they are carbon intensive, and so that would increase the price of electricity, our water bills, our oil, or any source of good or service that requires that business to emit carbon. So that would increase our CPI. And we've talked about how this emissions trading scheme would cause a short-term increase in the general level, or the price levels of general goods and services. We will see that this idea of sustainability in economic growth relating back to inflation may be compromised in the short run. so that inflation may increase and therefore economic growth may not be sustainable in that respect. Another thing is that because these businesses have lower profit margins, that may actually discourage them from producing more. So it may actually discourage production because they're not making enough money, and because if they increase their prices, they may discourage consumption as well. So as a result, by discouraging production, GDP will decrease. And since GDP is directly correlated with this idea of growth in real GDP, we will see that in the short term, economic growth would also decrease. So in the short term, we can see that this ETS is in fact bad for the goal of strong sustainable economic growth. However, let's look at this from the perspective of long-term viability. So if we don't proceed to implement these environmental policies and allow our natural resources to erode, this would actually impact our intertemporal efficiency. So although we're producing a lot now, we may not have enough natural resources to sustain our economic activity in the future. So in the long run, with these economic policies which drive production away from using non-renewables such as coal and oil and towards, say, solar or wind powered energy, this would actually increase the sustainability, increase ecological and environmental sustainability in the long run. So not only would this actually create new jobs, new technicians involved in producing efficient ways of utilizing our wind, solar, hydro, geothermal, you name it, renewable resources, and moving away from our non-renewable resources, we will see that there will be new industries created, and as a result, in the long term, create new jobs, and by creating new jobs in the long term, actually improve our potential growth rate. So in the long run, we can see that by using these environmental policies, it preserves our natural resources for the future. And it also mitigates this idea of climate change, which we've discussed does indeed exist in this course of economics. And by mitigating climate change, it would reduce the number of floods that can wipe out crops. It may reduce sea levels rising, which may destroy cities, and it may reduce the number of natural disasters, which may affect construction, infrastructure, crops as well, and humanity as a general group. So as we can see, in the emissions trading scheme, although it may cause short-term despair for the economy by reducing economic growth and increasing cost inflation in the very short term, in the long run we will see that this is beneficial for all mankind because it not only improves jobs, it increases production levels, moves production away from using these non-renewables, which may in fact be harming our atmosphere, and increase both our material living standards as well as our non-material living standards. So it is good for these policies to be implemented, and so as a general rule of thumb, we're going to suffer in the short run. That's slightly inevitable, but in the long run, the government can help sustain a very strong and possibly even sustainable rate of economic growth that would maximize both our material and non-material living standards.